Hi everyone, I'm Lydia Smith, your trusted mortgage advisor. I have prepared several tutorials on mortgage finance for the first or second time homebuyer. This tutorial is titled Student Loan Blues. Are student loans preventing you from purchasing a home? By the end of this tutorial, I should have a solution for you. In April of 2016, FHA notified lenders that effective June of 2016, student loan calculations would change, meaning lenders could no longer use income-based repayment amounts nor use zero for deferred payments. We had to scramble for 2 months to close everyone we could before that new law went into effect. It was a nightmare. So now let's move on to current calculations that lenders use for student loan debt. Here are the current student loan calculations that lenders must use. For FHA, we must use 1% of the outstanding student loan balance. So if your student loan balance is $100,000, lenders must use a payment of $1,000. Ouch. Now USDA Rural Development, their guideline is the same as FHA. 1% of the outstanding balance. Therefore, we must use $1,000 in your debt loan ratios. Again, ouch. Now VA is a lot more forgiving than FHA and USDA Rural Development. If a VA loan is deferred for a period of 12 months, guess what? We can count a payment of zero in your debt ratios. I repeat, if that loan is deferred for a period of 12 months from the date of your new mortgage payment, we lenders can use a payment of zero in your debt calculations. Now, if that student loan is not deferred, lender must use a payment of 5% of the outstanding balance divided by 12 months. Here's an example. Your balance is $100,000 times 5%, that's $5,000. Then we take $5,000 divided by 12 months, that gives us a payment of $416.67, or $417 when you round up. Now, Fannie Mae changed their guideline in November 2017. Lenders can actually use the payment on the credit report, as long as that minimum payment is $1. So if your student loan balance is $100,000 and the credit report reflects $1, then $1 is the amount that we can use in your debt ratio calculation. Boom! Freddie Mac has now changed their guidelines as well, effective October 28th. Freddie Mac new calculations is as follows. Lenders can use their payment on the credit report if that minimum payment is $1, same as Fannie Mae. Now, if that payment on the credit report equals zero, then the lender must use, let me see how I can say this to keep it simple, 1/2 or 1% of your outstanding balance. So here's an example. If your balance is $100,000, 1/2 or 1% is $500 that we will use as your monthly payment. As you can see, VA, Fannie Mae, Freddie Mac are the best solutions to student loan debt problems. Just remember, VA is for veterans only, and Fannie Mae and Freddie Mac requires a minimum credit score of 620. So, now that you no longer have student loan blues, contact Lydia Smith, your trusted mortgage advisor, to purchase or refinance your home. Tune in on more tutorials on mortgage finance.